And now, the AfrAsia Bank recently published the new wealth report, which tracks wealth management trends in South Africa. Joining us to give us a sense of what this actually entails is Ravi Teji, Head of Business Development at AfrAsia South Africa. Ravi, good to have you on the studio. And
Thank you.
In the studio. That sounded like a certain clip when I say on the studio. I hope the leave was good.
Absolutely.
First of all, I think one thing that's very striking here is, as opposed to many of us here who cover economic news, we usually think equities are top of the list when it comes to investment and wealth. But
Yes.
the report says otherwise, having real estate as just on top of equities. Just give us a sense of what more the report actually unveiled.
Absolutely. I mean, we conducted this report with our research partners, the New World Wealth, where they've gone through a database of 5,000 high net worth individuals from South Africa, had different interviews with financial advisors, wealth managers, banks, intermediaries, family offices, and we've also tracked movement of high net worth individuals. So coming back to your question, yes, the real estate has been the largest asset class for high net worth individuals in South Africa, followed by equities. Not a big difference. Yeah. Real estate is 30%. Equities is 28%, so not too far. 21% business interest, cash and bonds 15%, and alternatives 6%. Under alternatives, where we have collectibles, art, and classic cars. These are items that hold value over a period of time.
Yes. I find that very interesting, and I'd like you to talk a little bit more about that. Classic cars and art that have become a popular asset class that high net individuals are going for.
Yes.
Some of the reasons around this.
So, I mean, a lot of fine art classic cars have over time held, again, that's what our research says, has held value. And so the global top-end art market is valued at $75 billion US. African art accounts for $1 billion, of which $450 million accounts South African art. According to our research again, South African fine art has shown growth of 28% over the past 10 overs, and it's been one of the favorite for high net worth individuals to invest into. Going to cars, global classic car market is valued at around US $5 billion. According to our in-house indices, classic cars have given a strong growth of 160% over 10 years. So again, a very favorite for high net worth individuals.
This reminds, I don't mean to sound like the head of programming here, Chris Bishop, but it does remind me of the old times.
Right.
When we did have the gold standard, and
Yes.
Because there was so much inflation just before the Second World War, you had a situation where the Germans preferred to actually invest in, loot a lot of the paintings and collectibles. Correct. Because inflation could not hurt them. Do I get a sense here that maybe this is a direction that we are seeing more of the millionaires kind of hedge against inflation with collectibles that do not particularly depreciate?
Yes. What's happened is wealth management is advanced. So we preach diversification. Before it was only equities or assets and properties, but today everyone wants everything of everything. So what I mean by spread your bets, and after 10 years, look at the value of it. If you've achieved good value, good for you.
Another element that's quite interesting in the report that you talk about is that only 6% of the wealth and high net worth individuals are under the age of 40. A large number of those high net worth individuals are still between the ages of 50 and 60.
Correct.
What is the report showing in terms of this trend? Are we seeing more younger people become richer, or are we still stuck in that middle age?
No, there is a huge growth coming from the young generation with the changing times. With now we are going tech, everything is going technology, so we've got technology billionaires. The old wealth was managed well, will keep managing well, and with all the well structuring and I mean, it's been passed over for further growth.
Right. Let's maybe delve into some of the nitty-gritties of the report that did find that you do have lawyers accounting for a staggering 28% of the South African millionaires.
Right.
I don't know. If I have a child, should I be pushing him in that direction?
I mean, again, like I said, this is out of research and interviews with where most of the wealth has come from, and we've seen that the lawyers have ranked quite high.
But all of us were traditionally being told, well, for the past 5 years, that
Right.
tech,
Yes.
and geeks are the new millionaires, and this proves otherwise, at least in South Africa.
But we need somebody to put the deal together, so that's where the lawyers fall in.
I think another interesting one that's come out from the report is the kind of spending habits that South African high net worth individuals have.
Yes.
It was a significant element of the report in terms of South Africa being attractive because of our luxury brands and destinations and things like that. So in terms of spending,
Yes.
what are they spending their money on when they're not investing?
I mean, a lot of investments have gone to luxury brands, but again, those are mainly dominated by international brands. So that's where the South Africans have been spending money. We do have our local brands, but again, it's an area of development, a huge potential. So yes, luxury brands have taken quite well in the South Africa space.
Very fascinating indeed. Let's maybe delve into the post-grad rally. If you look at 27% of the millionaires having a postgraduate degree, at least according to the report.
Yes.
What does that say about many of the investments that we've seen Stadio come out edging into the higher education space? Are we seeing a correlation here between much of the South Africans actually edging into postgrads going forward?
Absolutely. I mean, again, based on our research, we feel that's the way forward.
And then, so there's a reason here. I mean, there's something that was spoken about here, that things that attract and keep high net worth individuals in South Africa. There was a list that was mentioned in the report, and I just want you to paint a picture. You know, what are some of those things that are keeping high net worth individuals in South Africa
Right.
at this time?
I mean, most of what ranked first was obviously the South African lifestyle. The lifestyle that we have here, what you'd get with that kind of money outside would not be the same. And we've also seen a lot of our South African clients looking at, no, we need to hold on, the change is going to come, and then we'll see that things moving in the right direction. So if you, for example, take 2016, our rand ended at 1370, and in December we ended at 1203. So there's some positivity coming out from that side. JSE All Share Index was also up in the last 10 years by 30%. And the global equity markets where has been up 43% in the last 10 years, where a lot of our South African high net worth individuals have exposure to. So again, it's a diversified risk, and that's the approach that we've seen a lot of people taking.
And I thought that the JSE, the data from the JSE was rather interesting. The JSE last year was under a cloud of scrutiny, with not being harsher with companies like Steinhoff, and so in terms of regulatory procedures to protect various stakeholders. Is this not something that you might see deterring investors? Or are people relatively happy with the way the JSE conducts its business?
I mean, that was a one-off. I mean, there's a lot of cases that might come out in future, and so that one-off would not bring any negativity to a client. A client would look at a time horizon between 5 to 10 years to look at what's and yes, governance is important, so that's what we need to bring into the market.